Stop what you're doing. If you own any semiconductor stocks right now, you absolutely need to see this breakdown. Everyone is hyper-focused on the flashy companies building the massive AI models, but they are completely ignoring the hidden, foundational players making it all possible. Enter Teradyne. This is the ultimate AI pick-and-shuffle play. Let's dive in and uncover what's actually driving the hardware side of this AI revolution.
241%. That is Teradyne's staggering year-over-year earnings per share growth for the first quarter of 2026. Look, I know a lot of us share a very real, very common fear as retail investors, buying into rapid, tech-driven spikes right before a massive crash. It's terrifying, right? So is this just pure hype or a temporary blip? Well, by the end of this explainer, you're going to know exactly what's driving these massive numbers, and we're going to look under the hood to see if this growth is actually sustainable.
Just listen to this recent quote from CEO Greg Smith. He said, with revenue of approximately $1.3 billion and non-GAAP EPS of $2.56, Teradyne delivered record results. In Q1 of 2026, our revenue was $200 million, or 18% higher than that previous record. That non-GAAP EPS is essentially their core profit from operations. And keep in mind, their previous high watermark was way back in the second quarter of 2021, during the consumer mobile peak. This current AI-driven surge has completely eclipsed that era. It's honestly a shocking testament to just how fast the market is shifting toward artificial intelligence infrastructure.
To make sense of this, I'm going to give you a clear, actionable framework today. Here's our agenda. First, the AI revenue explosion. Second, scaling the data center. Third, the hidden robotics engine. Fourth, financial health and returns. And finally, valuation and future outlook. We're going to unpack both of the company's growth engines and figure out their future valuation through these 5 structured sections.
All right, starting with part 1, the AI revenue explosion and a massive market shift. A company doesn't just accidentally grow its total revenue by 87% year over year, right? There is a massive fundamental shift happening here, and we need to look at exactly where that cash is coming from. Check this out. In the fourth quarter of 2025, AI-driven revenue made up about 60% of Teradyne's total. By Q1 of 2026, literally just one single quarter later, that jumped to roughly 70%. We're seeing a rapid, wild acceleration of AI acting as the primary engine for the entire company. It's a total explosion in demand that's transforming their core business almost overnight.
Moving on to part 2, scaling the data center. This is our classic pick-and-shovel play. Think of the current AI boom like the 1849 gold rush. Teradyne isn't out there mining the gold. They aren't the ones building these massive AI language models. Instead, they're the ones selling the high-tech shovels to the miners. They provide the critical testing tools. They partner with highly verticalized customers to maximize yield and quality at every single stage of the manufacturing process. Because look, when tech giants are developing incredibly complex, expensive AI compute infrastructure, they literally cannot afford a hardware failure. Teradyne's testing equipment ensures these insanely intricate chips actually work before they're ever deployed into multi-million-dollar data centers.
Let's actually break down how this flows across the supply chain. Step 1 is testing at the wafer and die level, so the raw silicon material. Then Step 2 moves to the substrate and package, which involves some seriously complex interconnects and optical testing. Finally, Step 3 is the final integration into the AI data center itself using automated production board and system-level tests. Teradyne is injecting immense value at every single step of this pipeline. Without these rigorous testing steps, scaling these AI data centers reliably, it's just not happening.
Okay, section 3, the hidden robotics engine. This is their second catalyst.
Now, while semiconductor testing is hogging all the spotlight, Teradyne has a second, highly strategic growth engine. It's much smaller today, sure, but it is quietly building massive momentum for the future. The contrast here is super fascinating. The semiconductor test segment pulled in a whopping $1.11 billion in Q1 revenue, while the robotics segment generated $91 million. Obviously, the semiconductor side is the massive cash cow right now, but looking at them side by side contextualizes their distinct roles. The core business funds the innovation, while the robotics side serves as this incredibly powerful, future-facing catalyst. And you cannot deny the momentum in this robotics division. Q1 was their 4th consecutive quarter of sequential growth. Plus, they're aggressively expanding their collaboration with Flex, deploying collaborative robots or cobots and autonomous mobile robots right in their own global facilities.
On top of that, they just scored a decisive legal victory in a German court, successfully protecting their Universal Robots' intellectual property from infringement. Oh, and they have a brand new U.S. manufacturing hub opening in late 2026. When you factor in the massive push for industrial reshoring and AI-driven automation, this division is perfectly positioned.
Let's move to Section 4, Financial Health. Time to assess the balance sheet.
We've talked extensively about the growth narratives, but analyzing the balance sheet shows us where the cash is actually flowing. Comparing late 2025 to early 2026, sales jumped from $1,083 million to $1,282 million. Operating profit surged from $314 million to $480 million. But here's the curveball. Cash and marketable securities actually dropped, going from $448 million down to $394 million. Why? Well, it's because their working capital, the money tied up in day-to-day operations, ate up a lot of cash due to big swings in operating assets and liabilities. We're talking receivables, inventory, and prepaid expenses as they scramble to ramp up for this unprecedented demand. So while profits skyrocketed, the day-to-day cash flow dynamics are a bit tighter as they fund this massive expansion.
Finally, Section 5, Valuation and Future Outlook. Let's navigate the cyclical risks.
All right, this is where we have to confront that huge fear retail investors have, buying right at the absolute peak of a rapid tech-driven spike. We have to be totally objective about the road ahead, and that means listening to the company's own warnings. CFO Michelle Turner cautioned investors about, quote, the lumpiness of this new sales pattern. Management also explicitly stated they expect a 2 to 3-quarter surge that may lead to a shorter period of digestion afterward. Basically, 2026 sales are expected to be heavily front-half weighted. It grounds our excitement, right? It reminds us that semiconductor equipment has always been a cyclical business, and a period of digestion is almost certainly coming.
But then, you see a number like $950 million. That is Teradyne's projected free cash flow for fiscal year 2026. Guys, that's a massive 110.5% jump from the previous year. A staggering figure like that completely challenges the narrative that we're just looking at a temporary, lumpy equipment cycle. I mean, when a company is poised to more than double its free cash flow, that signals a fundamental expansion of their entire business model. We're looking at a totally new level of profitability here, not just your standard cyclical peak.
And the long-term indicators strongly support that optimism. The semiconductor test market as a whole could grow anywhere from 20% to 40% in 2026 alone. Plus, Teradyne is making huge progress toward a major GPU tester qualification in the first half of 2026, which is expected to unlock initial production revenue by the second half of the year. And their long-term target model? It is incredibly ambitious. They're calling for roughly $6 billion in revenue. That is 2.5 times their 2025 levels. Thanks to these fundamental share gains and expanding markets, analyst targets are pointing to significant upside stretching all the way through 2030.
So we've unpacked the staggering growth, the totally indispensable testing ecosystem, the quiet robotics catalyst, and the raw financial realities. That leaves us with one final critical question for you to ponder. Is Teradyne's 2026 AI surge a permanent plateau that's elevating the company to a totally new baseline of operations? Or are we just witnessing the peak of a very lumpy, digestion-bound cycle? I'll leave it up to you to weigh these incredible, record-breaking fundamentals against the admitted cyclical risks of the semiconductor industry. Thanks so much for joining me on this explainer. Keep learning, stay focused, and I'll see you next time.